The past few years have brought unexpected developments and disruption in the world of ETFs. As of today, U.S. stock market index funds along with ETFs account for more than a half of assets under the management of all U.S. stock markets. Before we proceed, we have a challenge that can help you take control of your finances in 30 days. If you are interested in getting the ebook for free, comment financial freedom below, and we'll share the ebook with you for absolutely free, which otherwise goes for $14.99. Now let's dive into the 7 best iShares ETFs to buy in 2024. Number 1, iShares Core S&P 500 ETF, IVV. iShares Core S&P 500 ETF IVV follows the U.S. stock index, the S&P 500, that represents the 500 biggest U.S.-based companies. This ETF is the basic component of many passive portfolios. The ultra-low cost of only 0.03%, wide diversification across the 500 large U.S. companies, and good historical returns are some of the primary factors which make it attractive for the portfolio managers. Over the recent past, during the 10 years up to 31st of December 2022, IV Value Ventures Company delivered an average annual return of 12.9%. However, large caps in the S&P 500 would not be a sure thing to beat in the market conditions. The S&P 500, though, has proved to be an extremely resilient index, which has made it through many downturns. As of now, IVV is situated with over $300 billion in assets under management. That means extreme liquidity is being provided, and the exposure to a handful of worldwide leaders such as Apple, Microsoft, and Amazon is hassle-free, which should enhance the continuous rise of its value in the future. Although IVV is likely to have some initial price movements, it continues to be seen as one of the safest guaranteed bets available for core U.S. equity exposure in 2023 and beyond. Number 2, iShares MSCI USA Quality Factor ETF, QUAL. iShares MSCI USA Quality Factor ETF tracks the corresponding index of large and mid-caps U.S. stocks, built and trading only for ones with quality characteristics, including better balance sheets, sustained earnings growth, and high profitability. Such top-notch stocks counter the volatile market atmosphere with the aid of better permanent results. The last 10 years, which ended on December 31st, 2022, is the period during which QUAL has generated an average annual return of 12.56%. A far superior performance to the S&P 500's index average of 12.34% during the same period. With rising interest rates in the backdrop of the year 2023, quality stocks that provide a dividend income stream and defensive names are likely to attract more investment, while riskier ones may struggle to get capital inflows. QUAL allows for growth impetus and safety net to be in one diversified portfolio without having the decision of choosing one of them. The assets under management at QUAL stand at $25 billion. Their competitive 0.15% expense ratio is, however, attentive to the long-term investors concerned with market volatility. Number 3, iShares ESG Aware MSCI USA ETF, ESGU. The ESGU is an iShares ESG Aware MSCI USA ETF that, through large and mid-capitalization stocks of the United States, will actually screen for environmental, social, and governance. ESGU follows a benchmark that halts the companies engaged in activities perceived as socially or environmentally damaging. Other examples being oil producers, firearm makers, tobacco firms, and alcohol manufacturers. It has been a while since ESGU was launched on December 1st, 2016 through December 31st, 2022, during which it has delivered a cumulative total return of 95.3%, compared to the S&P 500 index, which touched the year's high of 104.3%. As the number of sustainability-driven investors is growing, this prices up the ESGU, which means that streams of the assets is going to still flow into this product. Available for a minimal cost of 0.15% with a whopping $25 billion worth of assets under management, ESGU is one of the most efficient and diversified ESG investment vehicles. Number 4, iShares Global 100 ETF, IOO. iShares ESG ETF MSCI ACWI comprises of the 100 largest environmentally sustainable companies in the world, for example, oil, aviation, consumer electronics, and utilities. The iShares Global 100 ETF provides a broad exposure for the investors to the 100 largest publicly traded multinational companies by way of investing in the sector. a constituent of a composite index covering mega-cap global stocks across 45 countries and 10 categories, which include the primary protagonists, the inventors, the drivers of the global economy. Having started on the 5th of March 2008 and finishing on November 30th, 2022, IOO has yielded 164.5% in total return compared to 173.0% achieved by S&P Global 1200 Index. Past success is not always replicable in the future for IOO, but it indicates the endurance and currency-seen growth potential of large, well-established global corporations. Since it is 0.20% cost ratio, it is a budget-conscious way of spreading your risk globally. Number 5, iShares Core MSCI Emerging Markets ETF, IEMG. The iShares Core MSCI Emerging Markets ETF is designed to provide broad equities exposure to large and mid-cap stocks in over 20 growth-oriented developing countries, while including developing powerhouses like China, India, Brazil, Taiwan, and others. Overall, IEMG has performed differently than broad indices of global capital markets, reflecting the specific exposure to risks and volatility associated with emerging market economies. It underperforms relative to its benchmark index, the S&P 500, over the last 10 years ending December 31st, 2022. It produced an average annual return of 1.56%, while the latter had an 11.70% annual return. With $53 billion in assets under management and an edge-cutting expense rate of 0.09%, IEMG makes investors sacrifice their pennies to invest in emerging countries. These ETFs are designed in such a way to provide links to more study prospects from emerging markets with growth rates even higher than the United States. Number 6, iShares International Select Dividend ETF. iShares International Select Dividend ETF gives an exposure to international firms that attained good dividend growth streaks. IDV offers a dividend yield index consisting of 100 stocks expected to pay out big dividend yields, but don't lie within the United States. Companies must show growth in dividends for 100 consecutive years from which they will be considered qualified. This means that they will thus invest in equities which are biased towards sectors presented as the reliable income players, such as utilities, telecom, and energy. IDV, with its variable exchange rate, has shown volatile results during the period of currency market changes. The S&P ETF of the last 10 years, starting from 31st December 2015, has reported a yearly return of 1.99% less than 9.28% for the S&P index. While cash flow is lower on a NAV per share basis than a high dividend stock, IDV has a trailing 12-month yield above 5%, much higher than most bonds yields, even as of January 2023. While central banks are augmenting interest rates, IDV may benefit from the selling of fixed income securities to high dividend stocks, which can boost the price and dividends of the company shares. To global income investors with weakened strength of dollar, IDV offers a basket full of companies related to international and with track record of growing dividends across the time. Number 7, iShares TIPS Bonds ETF TIP. The iShares TIPS Bond ETF tries to do the same thing as an index made out of inflation-linked U.S. Treasury bonds. This kind of treasury bonds are usually called TIPS. Being a fund, it allows participation in the TIPS, and with this one is ensured of the protection against price increase. A 2-year inflation forecast looking up to 2024 means that TIP can be included in portfolios to offset its impact. Over the course of the last 30 years, the TIP has given an average return of 4.90% per year, based on a standard deviation of 6.05%. Therefore, their returns are viewed to be inflation-proof, while still being rewarding. Inflation warfare towards the Fed is mainly done through rate hike, and Bond Tip 2 becomes safe from the further rate rise. The fund provides a high cash flow that is currently up to 4%. Its returns have a low correlation with stocks within a portfolio, hence appealing to anyone who is looking for a stable portfolio allocation. Through the diversified international exposure of U.S. stocks, iShares of international stocks, emerging market and dividend ETFs, the investors can arm themselves with a diversified portfolio for 2024 and protect it from any unfavorable changes. The basket works along these lines to lower overall costs, as you can trade against indexes, assets, and ETFs despite incurring a single cost. iShares ETFs are doing exactly that for you, by helping you to take advantage of opportunities and with risk management means in the forthcoming year. Like, comment, share, subscribe, unlock financial freedom. Thanks for watching.